Hello everybody. So in this video I'm gonna talk about why I will be buying like $2,000 worth of Cinedigm stock. Okay, but before I begin, for those of you like watch my previous video, I'm gonna give some heads up. So like my previous video I was talking about mogul stock. So here's the update. So on February 23rd, the mogul stock drops 20%. That is a crazy drop. So I still haven't sold any shares. Here's my proof that I still got all my stocks. And the drop was kind of surprising as well. Did I got scared? No, because the fundamental of the company is still the same. Right now, I'm just waiting for them to release the payment to payment feature on mobile app. So it's kind of like a cash app that I can send my brother $5 without any fees. I remember reading some article about it, and they're going to release the feature on Q1 2021. So latest will be March 31st. They might be able to release it if they don't get postponed. So the stock went out nice, almost 6% on the after hour. Now let's get back to the video that you want to know why I invest almost $2,000 on Cinedigm stock. So what's the ticker for it? Hold on, let me find it. It's like toward the bottom of my portfolio. Right now, my portfolio holds about almost 100 stocks. So that is most of them, 90% of them, 98% of those stocks is one or two shares, not a lot. But my majority position is on Tesla and stuff, and Mogul, Square, Snapchat, those kind of big names. Okay, so I am having trouble finding the stock. I'm sorry, let me. Oh no, it's not right here. Holy crap! I think it's on the top. Yeah, that's why I said get more organized. Oh crap! I forgot. This is embarrassing. So I still right here. Cinedigm, ticker symbol CIDM. Okay, I've been buying it for like 2 or 3 weeks, but I forgot to make a video about it. But since today it drops, my light bulb went on that I need to make a video about this stock. So since it dropped, since it dropped 20%, I think you can take that as my punishment for not making a video. Yesterday, it was up like 50%, so I bought more shares on this company today. So I also want to give a disclosure that I'm not a financial advisor. What I say could be wrong, and please don't copy my trade as well. Like, I don't know what your risk tolerance is, but this stock could very potentially lose like 80% of your money. So please don't copy me, and please also do your own research. And dropping $2,000 on a stock, on a micro cap stock that's around $250 million market cap is extremely risky. And it's extremely risky because the company is very small. So just want to get out there. So please do your own research on this stock. And this stock have higher chance of losing 80% than mogul stock and any other stock, because it's just way too small and to drop that much money in there. So if you want to get in, I will not recommend putting like 10% or 5% of your portfolio on this stock. It's very risky. Maybe just 0.5% of your portfolio. Okay, it's very risky. Okay, but I do like the stock. Let me tell you why. So the stock is kind of hard to explain, and most people like won't. I spend like 10 hours researching this stock. So It's so what this done is basically, you know how everybody like is core cutting, like cancel this network, cancel cable TV, and watch TV shows on Roku or other OTT like channels like Crackle Plus, tubi, what else, Plato TV, those kind of platforms that we can watch TVs on. Well, everybody is like trying to complete this section. Cinedigm is kind of like the company that owns the content that Roku needs. Like Cinedigm have a lot of channels, like the Bob Rose channels on Roku, tubi, Plato TV, and stuff like that. So they own, they're trying to own the content. They don't own a lot of content because they just started this strategy 18 months ago, not too long ago. So they have two business. One is the OTT. That's what I was talking about. They have the channels on Roku and Plato TV, Tubi, and those kind of stuff like Bob Rose channel, Con TV, and what I forgot on top of my head. Then there another business is the movie projector business. So what I mean is that they sell a movie projector to AMC, and when AMC use their movie projector to screen like the Spider-Man, they they take a fee. So it's like per use fee. So they have a 10-year contract on the movie projector. So that's their legacy business, and that's what their stock that used to be value at. And they started doing that legacy business that they rent out their like run it out with a contract to AMC or other major theater chains of the movie projectors. And every time they play a movie using their projector, they take a fee from the theaters. And they started that on like 2008, and the contract 2008 is like 10 11 years, and right now it's 2021. So most of their movie projector contract is expiring, and that's because as more time pass on, their contract becomes less viable. That's why the stock price is going down like that, because their contract on their movie projectors is having less value. Once the contract is out with AMC, they are going to sell the projector to another third party and get cash out of it, because they are not going to do that business anymore. They are going to focus on the OTT market, like building, acquiring, and merging channels to show Roku. So so that's what the stock price used to value on, but they are transforming into a OTT company. I don't think the market have realized that yet. On the past couple months, they acquired some like category focused subscription company. So for example, like Screenbox is a subscription product that offers horror movies, not scary movies, that focus on scary movies. So it is a niche product, and they focus on it. I think the subscription is like $5.99 or something like that, and it's different, kind of different from Netflix. Netflix then focus on broad product like everything, documentary, drama, action, film, everything. But Screenbox focus on scary movies and stuff like that. So they acquire that, and usually they try to acquire those companies with less than $10 million, and So that's what they do, and they right now they let me just give some better explanation on what's their main business now. It's basically acquiring older content. Like, and another example is Cinedigm acquired Bob Rose channel, Bob Rose content, and they acquire and distribute it on multiple platforms, and um, like Roku, Plalo, Tubi, and stuff like that. And they're going to do that. And they also acquire, I forgot what's the name of it. Fandor. It's kind of like another Netflix like subscription service. Overall, the company have like 200,000 OTT subscribers. So that's pretty good as they. And I'm not sure if I explaining it well, but they are basically moving. This company is like moving away from their legacy movie projected business into a more of a um, digital revenue business. So like, and when they acquired the Bob Rose channel, and they how do they increase the revenue? So what they do is that when Bob Rose and the product Bob Rose, they just the owner just show it on their website. But when Cinedigm acquired, they distribute it to all the platforms, and using like to Amazon Prime, Product TV, Tubi, and every OTT platform you can think of, to like 1 billion devices. So they when they distribute to all the devices, that you get a lot more exposure, and then you get a lot more chance that people will find the content. But and yeah, more people will find the content, and that's and when they watch the Bob Rose content, and Cinedigm put ads on that content, and they make ad revenue. And on recent quarter, Q1 was like they did like the ad revenue grow a lot. So let me find it. They just released their Q3, not Q1. Yeah, excuse me, Q3 earnings. So their streaming channel revenue up 85% year over year. So their strategy is working. So this just, if you take away nothing from this, my explanation is I know it's kind of confusing. Just need to know that their strategy is working, and their ad supported streaming channel like revenue increase on 3 months. They increased 79% on 3 months. That is amazingly crazy growth. They also own content from Film Detective, the Film Detective, yeah, those like classic movie as well, and they distribute it on Roku, like Amazon Prime as well, and so it's basically they're acquiring content that's like old and pretty cheap and reasonable, and like classic content and popular content. The owner usually don't distribute it on the Roku platform. When Cinedigm acquired, they distribute it, and then the revenue boom goes out a lot. So that, I think that's a genius move by them for doing that. And then another thing I like about this company is that they own a technology called Matchpoint. What that is, that if I'm a movie producer, and I want to distribute movie into Roku, that I need a technology to do it. So I will use Matchpoint to do it, to distribute my movie onto Roku or Amazon Prime. So they own that technology. That's a very good technology to have. And yeah, So so that's basically it. And let's talk about their debt balance. So they have around $25 million in debt. In cash, they just raised like $7 million on February. They have $33 million in cash. So the more cash they have, the better, because they can acquire more content and distribute it on all the OTT platforms, and their revenue will go up. And as their plan is to acquire or merge with 3 or 4 those kind of like companies that owns a lot of content a year and distribute them. So I think that's a pretty good play on the OTT market as well. Since they have little to no competition on this strategy, because everybody is focusing on building the Roku platform that everybody want to be the next Roku. But what if you can own the content on Roku? So that's what's the genius about this strategy. There's literally no competition and because nobody is like buying out content and distributing it everywhere and gaining more eye exposure on this as well. And then the CEO of this company have been with the company for more than 7 years, a long time, and he only owns about 1 million in stock. And I checked the transaction; he haven't sold any stock yet, so that's good. That's good. I think the CEO have a lot of confidence on the stock, because a couple months ago the stock was at 50 cents, and the CEO refused to do a stock split, because he have confidence it will be going over, the stock will get back to $1. Because if it's less than $1, it could get delisted. But right now it's over $1. Right now it's $1.55. So again, a summary. So Cinedigm is a company that buys content and distributes it on Roku, Amazon Prime, Plato, Tubi. They own the content, not a lot, just a little bit. Compared to other major studios, they don't own much, but they're still doing great. And so right, if you buy the stock, you basically buying the content on the stock as well. I don't know if I make any sense, but they also own couple 3 or 4 subscription service, and those subscription service like Dove as well. Those subscription service they you have around 200, I think was 245,000 subscribers. Yeah, okay, so the own, yeah, you're basically buying a lot of stuff on this company as well. Yeah, I think it's pretty okay, pretty good bet for me. And yeah, that's basically it. So yeah, please don't copy my trade, and it is very risky bet, because it's a small company. Okay, so I know I just put $2,000 on it, but it's small percentage of my portfolio. Yeah. So this just let you know about my research. Please do your own research and what you think about this stock, and leave a comment below. And please don't forget to subscribe and turn on the notification, and when I make another video, I will let you know. But when I sell the stock, I will also let you know as well. Yeah, thanks.